do whatever you were going to do, I guess.
Oh, okay. So, as promised, a deployment of capital.
Stop sitting like one of those weird cross-legged Englishmen.
I have the English feel going on.
Okay.
We got the money from the condo on Monday, and I moved the money over yesterday from the checking account into the brokerage account. And like here you can see.
Why does it say only 30,000 on that?
Because that's what I moved over, 30,000. That's all we're doing today.
Okay, so explain why. We have 120K.
We have 152,000 total. 32,000 of it's been earmarked for the high yield ETFs and the income fund. That's what we're going to be living off of here when we leave in a week or two.
We're doing that live investing tomorrow, so you can see what we're going to go into for the high yielders.
About 120,000 to deploy in the main account for the dividend growers and things of that nature. Based on the valuations right now, I only found a couple of things that I'm willing to put money into, and that's what you guys get to watch today. Our current portfolio right there, scroll down so they can see that's our current portfolio. I took out all the weekly payers and put them into the income accounts. This is literally just our main portfolio moving forward. Couple stinkers in there. You see the Camping World, yay.
So I don't know how to look at questions live if I can't get in here to tell if we're live to answer questions. So I either need that. I can't toggle back and forth if you're using the actual screen.
Oh.
So I don't know what to do here.
Imagine just be on
live?
Just on my phone here.
Are you not logged in?
One sec.
Is it the same thing? Are you not logged in? So how do you mute?
That's me. How
do we mute?
That guy sounds like a jackass.
How do we mute?
You turn the fucking volume down.
All right, whatever. Okay.
I mean, so that's here's our current portfolio. See, got some good ones. NVIDIA, we're gonna hold that for.
Where's the live chat now? Oh my god, I don't know how to use technology. I swear to God.
And then down here, like MO is another good one. Oh, there's a stinker, MPW. This is the account. I do want to add into BMY, but like it shot up so much. We're already up a lot. What are we up? We're already up $260 on like $1,200 or $1,100. So I have to wait for that one to come back some more to fall into my price range. So this is one I'm definitely going to put capital into in the futures, BMY. If you've been listening to the podcast for a while, the BMY is one of my favorite for like the next 5 years. I really think this one's going to what's happening in Bristol Myers and then Pfizer went through this last year is the patents. They have patents for 10 years where like the generics can't sell their cheapo version. BMY has a few of those patents running off right now, so their revenue's been.
So we said we were going to go live at 12. We probably should have waited to start until actually 12 since I started early and nobody's on yet.
Okay.
So I don't know if you want to just keep going or if you want to restart.
No, it's fine. Anyway, a lot of patents. We're recording this for a podcast, right?
Yeah.
Well, a lot of patents from this one have fallen off, so they have a lot of generics coming in the market with their current pharmaceutical supply. So they have a lot of money in research and development, though. So this one's good. And then we have down here. We have our 20% in ETFs. Obviously, I like the 60-40 deployment, but it's not going to be that way. I'm going to have to.
Okay, re-explain the 60-40 deployment for those who haven't.
Well, if you recall, the old 60-40 was 60% equities, 40% bonds, and I looked at that and it because the bonds aren't doing what they should do, the 60-40 wasn't doing what it was created to do. But basically, the premise behind it is in years where the 60% is down, the 40% will keep your principal intact, and the year the 40%'s down, the 60% will grow your principal. So I redid that with I like the 60-40 split between 60% in equities and 40% in ETFs, closed-ended funds, preferred shares, whatever. As for in this one here, I have to put some more money.
So the $120,000 has to meet the 60-40 rule that we have. It has to meet all of our valuation criteria. It has to meet
And the 5%.
5% rule.
I don't like to have anything more than 5% of my total portfolio size. I learned that from.
So no single position goes over that. And
where's this one? I learned that from this one right here. Yeah, look at that.
Yeah, IEP.
We are down a shit amount in that one.
A shit amount.
Yeah, I had that at one point. That was like 18% of the portfolio, and then when it shit the bed, like it really caused complications with our principal. And then they cut the dividend, and so I wasn't even making money on it. So it is what it is.
So the other key point is, I don't know if you said this, so if you did, sorry if we're repeating it again, because I was trying to get stuff set up and I wasn't listening. But so we did have $100,000 in this account originally before we got this new condo proceeds thing. And because we were splitting our portfolio out between good, stable, high yield, dividend grower, like categorization of the main portfolio that we're going to continue to let to compound, and then breaking out all the high yield kind of sketchier stocks, ETFs, whatever they are.
This is the main portfolio, which has all the good ones. If you go up here,
that is why this portfolio has dropped from 100,000 down to like 82.
Into our income portfolio, this is the one we're doing tomorrow. This is all the sketchy shit.
So he's already moved over the sketchy stuff into that. We're calling this our van life portfolio, and the other one's going to be like the main compounding reinvesting. So today we're going over that main compounding reinvesting. But that is why that summary, even though we've been saying for the last however long that we have about 100,000 in the account, that's why it's now showing 82, because he just moved about 20,000 out of it into that high yield, like I guess sub account.
Moved to pretty much exactly 20,000.
And the reason he only has 30,000 in here to invest is because he's already gone through the list and determined that we do not have the stocks that we want in the proper valuation, which we will go over because I'm going to ask him that at the end. But he has earmarked specifically the 30,000 for exactly what we're going to go in today, or at least put positions in, and you'll get to see that in live stream. And then I don't know if you're planning to put a portion of the rest of the money, 90,000 into dry powder or
haven't decided yet. It depends on like I know what the macro. I have an idea what the macro trends moving forward are going to be, but I don't know what the valuations are going to be. Like they just had a. But
report. you can share that thought process once you go through what you know you're going to put in.
This morning that the price to earnings for the S&P as a whole is at like it's the highest it's ever been. It's like 40. Okay. So like there's a lot of shit that is extremely overvalued in stocks right now. So you have to like hunt, which I do like on a weekly basis when I create the top 10 chart for the stocks going ex-dividend the following week. That's where I find a lot of the stuff. And then I have subscriptions to a few different subscriptions that I paid for, like the Dividend Hunter. I have a Utility Forecaster. I have Contrarian. What the hell is it? Contrarian Report or whatever it is. I also have Sure Dividend. Sure Dividend's a really of all those, Sure Dividend's a really good one, and like I wish I could pull it up so you guys could see it.
Yeah, we do have a podcast episode on that, so if you wanted to
that's where I got a few of these ideas for what we're going to do today, is just because they have a monthly report that comes out and they have the top 10 to invest in.
Do you have this list in a spreadsheet that you want to put in today?
No, I have it on
paper. We have paper.
This spreadsheet.
Okay. Tim said it's more therapeutic, or it helps him think when he's actually like writing by hand.
So let's start with the first one. Type in HTO.
HTO?
HTO.
Okay, HTO. AmericanSomething.com.
Utilities have been good since 2024. There is a group of utilities. I thought we turned that off.
I thought I did too.
There's a group of utilities that actually haven't performed as well as the electric and the gas, and that's the water utilities. But if you know anything about like how the West is going, if you're from the East Coast, you may or may not. If you're from a different country, you may or may not. If you're in the West, you know what I'm talking about. Like the water situation in the West is pretty bad. It's pretty scarce. To me, like in farmlands, water is going to be just as valuable as gold. So we
water is actually, I think, more valuable than gold.
We need to get into
because without water, there's no life.
Some exposure into H2O and
H2O.
H2O or HTO used to be San Juan water. I think it's SJ.
Really, San Juan?
San Juan water. SJW is what it used to be, but they changed it to H2O. If you look here, disregard this. This D rating doesn't mean crap. Like that Schwab just does Schwab things, and they just like slap on arbitration letter grades for stuff.
And those are usually the opposite, right? That's after the sentiment's locked in, and it's usually going the other direction.
Yeah.
A lot of times.
So let's look at, we pull up the 5-year chart for San Juan. looks like crap, right? That looks like a really shitty chart right there. It's down 25% in the last 5 years. But at the same time, this is the one, like, I'm not
So
sure.
are these guys getting into the hydro or like the salination, desalination crap? Do you know?
No, it's just a water utility company.
Oh, okay.
This will tell you right here. Like, the compute company profiles up here, like, it's the production, purchase, storage, purification, blah, 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 of water in the Santa Clara. So that's the west.
Oh, okay. So you're just targeting them specifically out there. Okay.
I'm targeting these ones specifically because the valuation's so good. Like, this is something that I brought up before. I'm not sure if
The LSEG.
the LSEG, like, for whatever reason, this is one of the reasons that I like Schwab, because they actually give you like what a like a price target would be, and if you actually ran this through a lot of other experts or websites where you can get like a target price or like what you can potentially receive in gains, this is pretty accurate.
Oh, that's cool. So that's super helpful. Saves you time.
So, like, yeah, the fact that it says 62, it's so they're projected that this is going to go up to the $62 within the next 12 months, and it's currently at $50. So it's pretty undervalued. And then my sure dividend report. Hold on,
You have to talk this way though.
how the fuck am I supposed to talk?
That's
that
why
way?
I told you hold it on your thing.
Oh, jeez.
I said this to you
Why
earlier.
the hell did this go all the way down to the bottom?
Reasons.
Oh.
What are you looking for?
There it is.
H2O water report.
H2O. So you can read the numbers down there.
Okay, what am I reading? Key
It has
statistics.
57 years of dividend growth, and its current yield is down here. And you can get this in Schwab. Its current yield is about 3.4%, which isn't great, but as a utility, you know that it's okay.
Well, look what happened with utilities for the ones we picked going into 2025. They did what?
Outstanding.
Outstanding. That 100% gain
Some of them,
was ridiculous. So utilities aren't always
but they
boring.
grow. Like, if you if you're not familiar with Schwab, you click on the Show More button here, and it'll actually like their pay rates through the years. And what you want to look at here is these three right here. This will give you the
Scroll down just a little more because our faces are right here.
This will give you the 3-year growth of 5.6, the 5-year growth of 5.9, the 10-year growth of 7.9. So I like to use the 5 and the 3. The 10, like, there's some things that could happen where the 10's not quite accurate, but like the fact that it's been above 5% for the 3 and 5, and then it's raised this year was 5% as well. Its most recent dividend increase was 5% again. Sure Dividend has them as an estimated fair value price of 77, so that's much higher than that 62 that we saw on the
And the current value of $50.
And then another super important number here, which I don't have for all the ones we're getting into today, but most of them, is the 5-year CAGR growth. If you don't know what CAGR is, that's compound after
Something.
growth. So basically, it's whenever you take the dividends and reinvest them. So they're projecting this one to grow in the next 5 years at almost 21% a year. So that's pretty sick. I like this one. It's undervalued. I want to get into water, and so this is the first one we're buying today. Paching.
Paching. How much we buying?
And like, if you're in Schwab, you know what's going on here. You click on the quantity.
You know what's going on here.
We're doing 4,000.
4,000 shares?
$4,000.
Oh, enter the amount. So $4,000.
You just click there. Okay, then hit apply.
So what are you putting?
Just hit apply.
Apply what?
That's based on the current price. Now we have to go in here and look at the price. We could probably.
So this will give you the number of quantity. So 79 shares.
79 shares. We want this to be a limit order. I don't like doing market orders because there's too much crazy shit can happen. We're gonna hopefully get this at 50.
I don't like that you do round numbers.
And we're going to reinvest the dividends. I think we might actually be able to get 80. Yeah, 80.
There you go.
Review. Make sure all your stuff is accurate here.
Yes.
No fees, which is super nice because that's one of the people.
Oh, that is one of the nice parts about all the competition. No more fees.
One of the reasons that people use Vanguard, which is absolute shit, is because it has no fees. So.
Well, the fees were more for managing them, like.
We'll place order.
Oh my God, my brain. Index funds.
Go into order status here to see if. Yeah, so it's there.
So you'll see that it's open.
Everything's
$50.
good. Okay. That's the first one. That's because I think water is going to be like gold, and it's super undervalued. So that's the next one is SON.
SON. Son.
Let's click on Sunoco products. Not to be confused with Sunoco gas.
Really? I was actually just going to ask that question. Sunoco products. Is this actually gas related?
No.
No.
Click on the company profile over there.
The button. Sunoco Products Company, together with subsidiaries, designs, develops, manufactures, sells various engineered and sustainable packaging products to the U.S., Europe, Canada, and Asia.
Yeah,
Pacific.
so every time you get like a box with like styrofoam or plastic or crap in it, which isn't great for the environment, so we're not here to like preach about environmentally
sound
practices. Investments, but like anytime you open a box and there's shit in there's a high probability that the packaging stuff came from this company.
Wow, look at that decline in that chart.
Mm-hmm.
So undervalued.
So again, another one, the chart looks like Dookie.
Dookie.
But you go down here, else is we're saying 53.25 is what they're saying. So that's
For
even at that ridiculous number. It's on there somewhere. I think it's you have to find it.
Is this like a whole bunch of different stocks?
You just scroll down.
I can't see what I'm scrolling with.
That's another one, but we'll get to that one. Is it down or up? I don't know.
Don't know. You should know this.
Well, go up.
Obviously up.
Okay, so this one I want to get to the correct.
I should have this on my thing, so we could share it.
That's number one. Oh, it's that.
Number song.
And this one here, the Sure Dividend, it's number one.
Number one, uno mas.
It has, what is that, 49 years of dividend increases, which is pretty sick. And this is another dividend, almost is that a king? 50 years. So this will be a dividend king in 2026.
They're gonna try to hit king status. That gets them on the creme de la crop.
Dividend yield of 5%. Whenever they wrote this, it's currently at
where's it at?
4.9% right here. So it's about the 5%.
The price went up a little bit since this.
They think the estimated fair value is 68. And it's currently trading at 43.50, so there's a lot of room there. They're projected the 5-year CAGR growth to be 18.5, or is that 18.8 per year. Then we'll come down here into Schwab so we can see exactly what this one looks like when it comes to dividend growth. So this one, their last dividend that they increased wasn't as good as their 3 and 5 year. 5 years 4. This one's about 5. The last increase was only 1.9%, 2%. So kind of underperformed. So I'm assuming that the next increase will bring that back up. So it's within that 4 to 5 range in 2026 when they raise it again. Oh, another thing I didn't. If you scroll down here, you can see their earnings. This is why I think Schwab is a superior product to Vanguard. We have a Vanguard account for her mother's retirement.
Horrible. And
it doesn't give you any of this cool stuff. There's the EPS, $1 per share. Want to make sure that covers the 53 cents per share in dividend, which it does.
Mm-hmm.
Price to earnings is, I always use this one here because this is
forward PE.
Yeah, forward PE, because that's using their current their projected stuff, whereas the price to earnings is past. So I kind of want to use the future stuff, not the past. I mean, the past is a good a good marker on a map, but I always use the forward PE on this one. And you scroll down here further, they're projected to grow their EPS by 10% per year for the next 3 to 5 years, which is crazy. They don't have a lot of profit margin, so they the profit margin. What is that one? That is gross is 21 net. So I guess this is after they take out all their fees and costs and whatever else. So that it's only 1.5%, which isn't great. But they do have cash flow of $5.22 per share, which is pretty sick. And then if you scroll down even further into into Schwab, why is that not?
I don't know.
Into the Schwab database here. This is another one that a lot of people don't look at. Where is it at?
What are you looking for?
This is their balance sheet. Oh, there it is. Long-term debt. So the debt really skyrocketed in the last since COVID. This is COVID here. This is the coming out of COVID. So the debt really skyrocketed. So that means they probably bought something. If I had to guess, they probably acquired another packaging firm or something along the lines, or a mill or something. They probably did something for their debt to go up that high.
But they're getting ready to pop off more than likely, usually when they do that, right? If they're buying some asset, and then they usually go up after the fact.
So here's another one.
There's a lot of volume during this low peak.
So the 5% short, because like we've invested in things before that had like a 20% short. Like the short, like if there's a high percentage of short, it does create volatility because the shorts are trying to make money on it, and if they have
they're starting to pressure it down.
A good percentage of the stocks,
yeah,
then they can actually manipulate the price to fit their financial objectives. But
so 5%'s okay.
Yeah, Sunoco, we're going to buy.
Buy.
4,000. You don't have to erase the zero.
Okay. Apply.
Now we have to go into there to click limit.
Limit.
And we want this one to be do 43 limit, and you put market.
Wow.
Do 43.43.
Okay. Day only.
Yeah.
Review. Place.
Make sure everything's good. Place order. And I always, like every time I place an order, I always click on order status to make sure everything's accurate in the transfer from this to that.
Can't hurt to double, triple check everything.
Both those are already filled. We
so
already have
$8,000
in the water company and $8,000 in the packaging company. Yay, yes.
Already. Okay, what's your next one?
These aren't
or not.
These aren't sexy picks. But like you don't want sexy picks in a dividend growth account. You kind of want stuff that has stability and like a
so this is kind of equivalent to like our retirement package because we'll be living off the income stocks, and then these will be continuing to compound and grow. And if our numbers come out accurately, this should be growing. We should be reinvesting about $1,900 a month once all this is invested. And we'll be making about $2,500 a month from the high yield.
For the high yield ETFs, we'll be making between $2,500 and $3,000 a month. When we do that tomorrow, it's going to be chaos.
So if you were looking at this from a normal paycheck, we'd actually be investing 50%, just about 3,000. No, that's more than 50%, isn't it? That's like 66%.
What are you talking about?
If we're earning 3,000. Never mind. I can't do math. I can't do math.
I don't know what she's talking about.
I was trying to say, like, most people say to invest 10% of your paycheck, 15%, and then like the high people do like 20%, 25%, and then the really, really crazy frugal people do 50% of their paycheck. Well, for making $33,000.
50% would be $1,500.
No. But our paycheck would be the $2,000 or $1,900 plus the $3,000.
Not really, because this is a retirement. Like we don't actually.
But I'm saying if you would be, you'd be investing.
I guess I feel like you're trying to be technical, but that's not how I view it.
Okay, well, however you want to view it. But anyway, we're taking the onus to reinvest like a huge portion of what we'd be making a month to make sure that continues to grow in case inflation gets out of control. In case the high yielders like decide to shit the bed, go away. We'll have fallback money. So this is like us hedging our asses.
And here we go. The next one is an electric utility. I actually found
that's in here too, isn't it?
Undervalued. Yes, it is. An undervalued.
Did you only invest in this stuff in this sheet?
No.
It looks like it.
But it's just there. It is. This one here, I found an undervalued electrical company, so that's good. Let's look here first at the LSEG. Says $73. I saw an upgrade here. Oh wait, no, a cut here down to 73.
So what is that? A news article?
That's one of those experts who have their price.
So that's just they changed their target price from 73 to 78?
No, from 78 to 73. So they cut it.
I read that backwards.
Well, you look at this chart. This chart, again, looks like absolute dookie.
It does look at starting to reboundish, though.
This one doesn't have
compared to the other ones.
Very much short interest at all. It only has 1%, which is super nice.
Well, they can see it's trying to turn around. So that makes sense.
Here again, this doesn't. This doesn't mean anything.
Electric
don't
company?
pay attention to these big.
They're actually giving it an A rating. That's hilarious.
It's an electric company that.
We did good in electric last year, but again, the thought process with electric is the AI movement. Well,
it's not just an electric company; it's a public utility holding company that actually does electric and natural gas and water.
Oh, so you got water covered plus natural gas. But you're going to need a lot of energy in general for this AI stuff, and I imagine the blockchain.
And this is the northeast one. It's Connecticut, Massachusetts, and New Hampshire, which is all pretty big population areas that are so their revenue should be pretty good. If we look at their dividend, it's 4.5% ish around there. let's look at their dividend growth just to
I was
verify
going to say
that
this is a grower, right?
This is, yeah, allegedly.
27 years of dividend increases.
So 6%, 6%, 6%. So it's been pretty consistent at 6% the last 10 years. What does it say? The most recent increase was 5.2.
5.2%.
5.2 is their most recent increase. So 27 years. So you see, I hope you're seeing a theme here. We got the H2O, which was 57. We got the packaging company, which was 49. Now we have a conglomerate of utilities that's 27. Like what you want to, like I said in, I forget which podcast it was, but like because of the pullback in November, a lot of really good companies that have a good track record of dividend growth are on sale. And this is another one that's on sale.
So honestly, the timing of getting the proceeds is really good for for this pullback.
This one has $3.64 per share in earnings, which covers the 75-cent dividend pretty well. Forward PE is not too high. It's 14. Now, I don't know if you guys know this. If you never did this in Schwab, you can actually click on this little tab here. And this will bring up sector and sector and industry, and you click on the valuation. It'll give you what the sector on an average has as a price to earnings. 21. So that the electric utilities is 21.11 as a sector as a whole. So
and this one is what? What did you say? 14.
14.26. So
it's under.
It's under the median.
So typically, people will come up to the median of the thing in their own sector. And
this number here, I don't know, like we've discussed this before, the PEG number, like you want something 1 to 2, but utilities are always like in the 3, 4, 5, 6 range.
Okay.
So you look here, they're projected to grow their EPS by 6% the next 3 to 5 years. They have a net profit of 10.28, which is nice. Scroll down here further, their debt is ridiculous, and again, utility companies have obscene amounts of debt generally. But you see that their revenue has been consistent the last 2 years. We'll know more here whenever the end of when this 25 column comes out. But I assume
it's like literally about the same as it was last year.
I assume this column here will be about 12.2 billion or million instead of 11. What was that? That's
11.9.
11.9 million. That's or billion.
Yeah, I don't know if it's millions or billions. I can't tell.
Is it millions or billions? Oh, millions. So yeah. So this will be probably 12.2 billion in 25 instead of 11.9 billion. And another thing, I'm not sure if you guys know in Schwab, if you like the company but you don't like the financials and you see that it can pay stuff, here's a list of all their preferreds.
Oh my God, they have that many preferreds? That's crazy.
Yeah. That's how I like.
How you find stuff?
The Bank of Ozark has a preferred that's on here that's pretty good.
Preferreds are not easy to find in most of the other brokerages.
A DLR, when we get to that one later, I'll show you that one. What is that? Does it say anything else? What's the CAGR in that one? 13.3 13.3 with your dividends reinvested per year the next 5 years for what they're projected for this one. So this is another really good one that we're going to buy.
So they're saying the estimated fair value in this is 81 and it's at 67 ish, 67.80 right now.
Yeah.
So 4,000 again in this one.
We might be able to get another share.
Depends on what you want to buy it at.
Well, 67.81, I'm going to go down to 82. I'm going to bump that up one, so it's just over 4,000. Day only. All right. That's 3. The money goes fast whenever this stuff's on sale.
Order status.
Again, this is just
it's so easy to get your orders filled when other people are selling.
My OCD comes out, like I have to make sure that everything's good. So like I can't believe.
No, I do that. I double, triple check everything when it's like money's on the table.
I just brought this one up, huh? Oops.
I wish I could short you guys. That's awesome.
Short us? Why would you want to short us? That's not awesome. That means he thinks we're buying dumb stuff.
Can you buy more crappy Yomex funds? The Yomex funds are going to be tomorrow.
Yeah, tomorrow's going to be the one that just chaos.
That's going to be the high yield ones. Although I don't know how many Yomex we're actually getting in. I don't think there's.
No, I'm not getting any Yomex.
We learned our lesson. We got smacked a few times.
Look, we'll go back to Ozark.
I wish I could short you guys. That's awesome.
Why would you want to short us? So you think these are bad companies?
We were talking about that. Like, my dad always somehow has like the worst like choice of picks of things, and we said like we should just have him pick stocks and then just do shorts on his.
There we have the YMAX. We have LFGY, NVDY, AMZY, WNTR. And I think we have Fiat.
Yeah, Fiat.
Fiat right here. This is the one that just keeps on giving right here. So we have some YOMAX
that's from
stills.
before. That's from before.
I just don't.
We tried. We gave them their go.
Particularly care for them anymore.
I remember when I interviewed Jay and ULTY was at 10, but I put his feet to the fire and it all came out to be true.
Hmm.
I don't know who Jay is.
Jay. Okay.
Is this a famous person? I'm like really, really pop culture.
Jay and Silent Bob Jay, or
Jay and Silent Bob Jay.
I wouldn't trust his. I wouldn't trust his dividend pickers.
For sure.
He probably like IIPR though.
Probably.
Yeah.
IIPR, the pot REIT.
All right. The fourth one is right. We're on number 4.
Ozark.
Yeah, fourth one is the Bank of Ozark. This is a regional bank.
We already have some of this one, don't we? Or is this in my mom's account?
Mom's account.
Okay, so we don't
this
actually have this one yet.
Last year, I made a bold statement that I didn't think was bold at the time, that the regional banks would underperform like the big banks. The big banks crushed the regional banks by like 3-1 this year. So I think in 2026 the regional banks are going to catch up. But even if they don't, Ozark's on that list too. Even if they don't, this is like probably one of the better regional banks. The Bank of Ozark, it's basically, I think it's in Arkansas. Yeah, it's a full service Arkansas state chartered bank. It's obviously because that's where the Ozarks are. Hello, I'm not dumb, I swear. This one has 31.
Yeah, 31.
31 years of dividend growth. So that's cool. I mean, again, don't just this equity rating. Just disregard this. Like, I wish I could get rid of this. This is pointless. LSEG here saying 55 for this one, which is okay. What does that one say?
For which one?
69.
Yeah, 69.
$69 is what Sure Dividend's saying that the fair value of this one is, which is, like that's 30%, 20%. Whatever. This 5-year chart looks pretty fun, right? Looks like we should have bought here, but we didn't have the money.
Didn't have the money.
Or we should have bought here, but we didn't have
Didn't have the money.
But this one, I do believe it has a really good history of dividend growth. What's it say over there? Dividend, like the most recent one was 10%.
9.8.
Yeah, like you see, like look at this record of dividend growth in Ozark. 13% for 10-year, 11% for 5-year, and 12% for 3-year. This one's a grower. This is like one of the ones that you really like. I know there's a lot of experts out there that only will invest in dividend growers that have a double-digit, 10% or higher dividend increase. And I know a lot of the experts really like the Bank of Ozark. I would have gotten to this sooner, but we didn't have the money. Scrolling here further, EPS of 6.2 easily covers the 45 cents. I'm sorry. No, I'm doing it wrong. It's 1.59. 1.59 easily covers the 45 by a lot. So their payout ratio is probably, 40% around there? I don't even know. Let's look. Does it have a payout ratio on the dividend?
I don't know.
I think it does. Yeah, it's right there. Payout ratio means that for they're only using like 30% of their revenue to pay their dividend, which is super good number. Like a lot of people only want this number to be like at the max like 60 to 70%. So at 27, not even 28%, this is a ridiculously low payout ratio.
Especially for a bank, or whatever this is.
So let's dig deeper, see if I'm making a good decision. A net profit of 42.47. That's insanity for a bank stock. Look at its competitors.
-18, 7, 32.
That's a
33.
ginormous number. I didn't go through all this, did I? Price to sale, blah blah blah.
I didn't go through
price
all
to
this.
book is really good too. Like it's on.
I like how you do really depth stuff for some things and other stuff you're just like, eh.
Dividends super nice. The 5-year average is 3.05%. So this, to me, the 3.05 means this is undervalued. Just even looking at the dividend, 3.05 and 3.72. That's a pretty. It's not. I'm not going to say it's a huge difference, but that's a pretty big difference. Let's look at their debt real quick. Their debt is pretty much non-existent. What is that? Millions. What is that? 462 million in debt. Whenever their revenue,
Oh wow.
when coming in is 1.5 billion. So like they don't really
Plenty
have
to cover.
a lot of debt in this one.
Yeah, plenty to cover.
And we just discussed this one. There is the Ozark AP. You can actually get twice the yield for a preferred share. That is, what is that? Is
1637.
7 times 4, 28% undervalued. So like if you didn't feel comfortable investing in OZK, this would be the route that I would go, because you're getting a 7% yield. That's the last close of that. Generally, preferreds are $25 a share.
So why would you go with the main stock over the preferred for this one?
You get no growth in this one.
Oh, okay. And you think that this one's actually going to grow based on all the
historically,
stuff?
this one's growing 10% per year.
So that's the
more.
trade-off. Okay. Well, it didn't say 10. There's a little note here that says that it was actually 2.3 per versus previous, but I don't know if that, I might be reading that
Jay
wrong.
from YieldMax. Oh.
Yeah, I was going to say. So Oracle, yeah, I don't know what you watch on YouTube. I don't watch YouTube. Do you watch anybody else talk about
I watch a lot of different YouTube channels. I don't know.
Talk about the YieldMax stuff? He does hang out on Reddit quite a bit.
I do. I like the YieldMax. Where I find the most enjoyment in the YieldMax stuff is on Reddit, because people are like, I don't understand why I'm always losing money. These things fucking suck. But Reddit is a good time whenever you just like if you get bored one day, just go into Reddit and type in YieldMax, and you'll just get a whole slew of people that are super butthurt because they lose money in YieldMax. That's how, like, we did. Initially, I invested in the Tesla one, TSLY, and I
one went trash.
I lost a pretty big amount of money, so I had to learn how to actually navigate the YieldMax thing, and we've actually talked about that through the episodes. Like, if you invest in YieldMax, literally you just take your money as a paycheck and apply it to other stuff. That's my philosophy. Other people, because like turning the drip on, you're basically just buying a bunch of shares at a lower
He
price.
said most YouTubers who do YieldMax suck. That's pretty funny. But yeah, so that was the thing. We saw the potential with them, and if you just change your strategy a little bit and get your initial back first, we kind of learned that in the crypto investing with those higher, what the heck were they doing? They were doing that staking thing that they do, and it's like, you can actually, if you just take your money out first and then let everything run from there, even if it goes to zero, it doesn't matter. You get all your risk off the table, but people just ride it down and hold and hope, or just dump crazy amounts into them. But yeah, YieldMax has burned us a little bit, but honestly, after that first one, you were able to recoup everything except for like the fiat thing right now, right? And then there's a couple other ones that we're still collecting.
Fiat's crushing me. Like I thought, I guess naively, that if I was in the Coney one, which is the long, the Fiat, the short, would like kind of balance it. I chose poorly, because Coney's down 70%.
How could you predict that they weren't even going to do what they said they were going to do?
Fiat's down 80%. Like, I'm getting crushed in Fiat. Like, just crushed in Fiat. It's ridiculous how much money I've. Percent-wise, I only put a few $100s into Fiat.
Are we still down on the Tesla one, or did we actually get our money out of that one?
I sold the Tesla one at a loss. That's
okay.
That's the only YieldMax I lost money in. It was the Tesla one until Fiat. I think Fiat has potential to be the second one.
Yeah.
Okay, there's 4. We're still waiting on these ones here. What is this saying? It's 67. I said 67.82, so I'm going to have to bump that up. They went up, so we're going to have to bump that up.
You still have to the end of the day. You think it's going to keep going up?
Bump it, yeah. Bump it up.
He's saying the problem is you never get your initial back between the erosion and paying you out what they lose. And all trades you pay you from the NAV is terrible. It's called market erosion. It's the poor person's paradox. I had TSLY and Fiat, same time balance perfectly, and YieldMax trades loss. Same stock in opposite directions. Yeah, we had that same setup too. I can't. You said, like, we have gotten our initial out. But what Tim will do is, like, Coney was a really good experiment when we first got into that. What was it, last year? Year before?
I've been in Coney for 20,
We've had Coney pay us back twice.
28 months now I've been in Coney.
Coney paid us back twice, right? In the first before we did the actual experiment.
Mm-hmm. That's why I was so confident going into the YieldMax experiment with Coney, because I had already put money. I put $1,000 into it and recouped my initial, and then I put $800 into it and recouped my initial. So I did it twice. I was like, oh, well, this is just it's just printing money.
Well, the first time you accrued your initial, it really spiked up in price, and you actually sold out to get all your initial off the table.
No.
I thought you did.
No.
Was it that one?
No.
Second time? I remember there was a spike with something.
Second time I
Is that what happened?
I got $600 back, and I just sold the rest of the $200 because I had like a $1,200 sitting in there.
Okay. Well, I knew it was something you sold.
The first time I got
something.
my money back, just dividends. Because I had so many shares.
Are you sure?
Yeah, I'm positive.
I really feel like there was one you sold, and I thought it was that one.
I just did it with Amazon, AMZY.
Maybe that's what I'm thinking.
I literally just did it with Amazon. Like I was through the year, I was recouing. I had Amazon for 20 months, and I recouped 75% of it. So I just sold the last 25% to recoup the initial investment because I still have $600 or something like that in the AMZY.
We'll go over more of the yield max stuff in tomorrow's live stream because that's more the high yield approach. But yeah, most of the yield max aren't worth it for sure. But they are starting to, I guess, learn their lesson since Roundhill came out with holding actual shares of the underlying asset they do the calls on.
Okay. You saw I had to change the price on ES, and we got that one, and then I had to change the price on Ozark. And
it went through?
Yeah, we got partial fill on that one. The next one is Skywalker. Skyworks. I call it Skywalker because I'm a nerd. I like Star Wars.
Did we already have this one, or is this one again another one that was only in the retirement portfolio?
This is in the retirement portfolio, and we actually had this one in
forever ago.
In this particular.
What was it at when you were looking at it before? It was a lot lower, wasn't it? Or did it have that?
When we were in this, it was up here. It was like in the $100 range, but we got it in your mom's retirement account. We got it down here in the $55 range, I believe.
So right around where it's at right now?
Now this one's pretty
oh no, it's at 64, my bad.
Pretty controversial because like they lost like 25% of their revenue because they Apple went a different way, so they lost like a big chunk of their revenue because Apple went with a different chip supplier. They basically are a semiconductor. They just process chips and sell them to different companies. Which
is going to be big for AI.
I do believe for AI.
So the Apple thing really shouldn't it shouldn't like linger with the pain from that one.
No, the LS, this one here says 83.
Is that in this thing too?
No.
Okay.
I looked up the CAGR on this one yesterday when I was compiling this list. That they're expecting the CAGR to be 15% per year with the dividends reinvested. Though you don't really get a lot in dividends with this one. It is 4.3%. So I mean, it's better than the utilities, but it's like as a tech company. I use that term loosely. As a tech company, you generally expect like under 5% for dividends. So this one does okay. Okay. But you see that it's 176 earnings per share. The dividend was 71 cents, so that's really good. You see the forward PE of 14.62 is really good. We'll double check that again.
Yeah, I want to see what the competitors are
in the semiconductor realm. I'm like when I found this tab out, I was like, "God damn, I'm an idiot." Because when I used to do the used to do the top 10 chart, I literally was just like researching everything individually. I didn't like sector wise. It was horrible.
See the number. Where's the number?
You gotta go.
Valuation.
So that's what all of its competitors.
49, and this is at 14.
In this, the semiconductor sub-industry is 49 of price to earnings. So if you look at X, thank you. You look at this 14.62. That's vastly undervalued compared to its competitors when it comes to prices to earnings. They are expecting EPS decline because of the Apple thing. But I'm going to be picking up shares in this one throughout the next few years, I assume, because I like the company. I like what they sell.
You see where it's heading.
And I know they have, once the Apple deficit is off the books, this will probably be growing, 12% per year. That would be that. But they still do have a net profit of 11.67, which is pretty cool. Their debt's not really that, like you see they paid their debt down. Look at that column. Mm-hmm. Paid a lot of their debt down, which is super nice.
That was interesting.
Other revenues, actually, they're the revenue. You see it like 5.4 billion, 4.8 billion, 4.2 billion, 4.1 billion. So I expect this to be around this number, maybe a little bit less in 2020. Once 2025 is done, I guess they actually have 25 in there. Okay, 26. I expect this to be around this number. Maybe a little bit more, actually, for just going 2026.
I would think with all the other AIs and the robotics and all that other stuff coming out, that these guys would actually be supplying more.
Now, for all you chart nerds out here, here's like Schwab actually breaks this down like they do the average volume per day, and then they have your 20, 50, and 200 day moving averages. So like anything I would imagine below
What was this at 64?
this is pretty good.
Below the $70,
Yeah.
200 day.
And overall, I like this one. I like where it's headed. Let's look at their dividend growth. Have they grown their dividend? I didn't look that up yet. I know they have, but see, their payout ratio is really high, though. That's
90%?
That's super high, so they're going to have to get some revenue in to cover more of that. But they're growing their dividend at 7.5%. If you take the 3 and the 5 added together, 15. Yeah, 7.5% the last 5 years. I like them.
Obviously, or they wouldn't be on the list.
I like them a lot. I like them a lot.
I think you're freaky.
When you look at this
I like
5 year,
you a lot.
look, this 5 year chart is just absolute shit. Look at that, blah, blah. But you know, YOLO. Type in 4,000 again.
4,000. I don't like that it's all the same amount.
Well, that's what you do sometimes.
That's what you do sometimes. That's what you do sometimes.
Take that down to 90. Yeah, that looks good. Let's put it there, I think.
You doing another share? Yay, nay?
No, it's too much.
That's too much.
I can't afford that.
We're over our benchmark by $23.
I can't afford that one.
Oh my god, that's hilarious.
So ES filled,
Canceled.
Ozark filled,
So everything's filled except the Skyworks new one.
Skywalker. We'll get there. What is?
Yeah, what's next?
What's next? Oh, it's this one. This is another one that's gonna. Where the hell's the B at in the keyboard?
KMB, Kimberly Clark Corporation. It's
This
another
is-
one that has to be in the retirement account because I know we talked about it.
Yeah,
I doubt we have it, right?
No, this one's in the retirement account.
Yeah.
Basically,
Yeah.
they
yeah.
basically toilet paper. I think.
Toilet paper.
Wait, is it, diapers, toilet paper.
Toilet paper.
You have Huggies, pull-ups, Kotex for women, Depends for old people, Kleenex, Scott, Continental.
Depends is a big thing now.
Like this one here, they basically make a lot of stuff. Even like you see what happened here. This one was going along smoothly, and then it had an earnings, and it just fell off a cliff.
Oh, we like those.
I do like those.
We like those
I
massive
mean, there you
plummets.
see that the target price is 128-ish for this one.
What's it at now? I wasn't paying attention.
101, 102.
It's a high-priced one. You don't usually get into the high-priced
But
ones.
this one has a 4.9% yield, which is crazy for this particular stock.
What's it usually at? 2?
It's normally at
2.7?
3.8. And you see that it doesn't grow its dividend as much as the other ones. We're only looking at like 3 to 4% per year. So like it is a slow burn, as they call it. I like it. Again, here we go. Schwab doesn't think much of it.
D-rating. Ding, ding.
Look at that volume spike. Holy shit.
I know, that's what I said. When it fell off that cliff, that was people market panic selling
People
right
getting
there.
out. Holy shit. That's
Right. And then there's that bounce up after the fact. Like, this is why, like, one of the main reasons we don't do market orders and we do not do those,
holy shit.
Stop
That's a lot of
losses.
volume.
right? That's probably a whole bunch of triggered stop losses. Like, that's a prime example of what not to do.
Yeah, I don't believe in stop loss. I don't know if people know that. I just don't like them. So 182 per share, dividend of 1.26. That's okay-ish, I guess. Price 13.82 for the Ford PE. So again, you come up here to household products. I guess that's where we fall here when we're talking
TP
about
phone home.
diapers and tampons and stuff of that nature.
Depends.
22, 23 around there.
You got to pull that up.
Pull it up.
We have our faces down here. I keep telling you that, and you're like, what?
My bad. Here, let me do it again.
There you go.
22.86, so 23 about there. This
What
one,
was this one? 14? 3 point.
13.8.
Oh, 13.8.
Yeah, that peg's pretty high though.
I was
Holy
gonna say, I'm
crap!
looking at the wrong one.
If you're not from the price, peg is the price to earnings growth. So like the projected earnings growth divided by the price. So that's pretty high actually.
3.9.
Mm-hmm.
9.9. So it's basically.
I want that to
4.
be around 1 or like a little bit under 1. So the fact that it's at 4 is.
Was that concerning?
Nah, we're good. EPS growth projected for.
Is this going to be another UPS?
Maybe. I was thinking about putting more money in UPS. That might be one of the ones we do the next time we do this. Only has a 9.03. Its debt has gone down, so that's something. I guess they're doing like a cost savings thing. I don't know. I mean, and their revenue is crazy, dude. That's insanity. $20 billion a year.
Although I feel like this one probably has more security because it literally depends which, like,
That's a consumer
a lot
staple.
of people,
like
right?
when if the if the economy goes to shit, people are still going to buy diapers.
Yeah.
127 so like that's
200-day moving average 127.
yes,
50 is 109.
I just like the valuation, even from like the chart nerd perspective. I like the valuation of this one.
All right, so get in. But the fact that all those like probably the stop losses got triggered with that really big down spike and that high volume, that's probably what that was. Bye.
Yeah, 4,000 on this bitch.
You and your 4K.
Well, that's how I did it, so I could actually know what to put in here.
To make it easy.
Mm-hmm. You want to
limit order.
Limit 101. Let's do that. Day only. Okay.
Only 39 shares. So sad.
Now
Those big ones suck.
We'll add to it.
Over time. Dripping.
We'll add to it over time. Oh, Skywalker filled. Yay!
It should have. All right, what's next?
What do we have left? Let's look at what we have left.
Positions.
$10,000 in cash minus. We have $6,000 in cash left. What do I have left?
I was gonna say, what do you have on your list?
Oh, one that we currently hold. I'm going to put more into.
Which is?
I'm going to show people right now.
Yeah.
Everyone.
You're not even going to tell me.
Everyone, calm down.
Super secret. No DLR. I should have guessed.
If you haven't been listening to us before, like I'm pretty big on data centers, and DLR is like one of the biggest data center ones out there.
So how come you went with the preferred if the preferreds don't grow?
Well, if we type in DLR. It's one of those like where you have to make a determination.
Which way you go? Because preferreds you don't get as much appreciation on the upside.
So this one's decent on the chart wise. 197, so they're $50
D-rating.
They're thinking $50 more, but like I just don't. 3.29
dividend yield.
So DLR I like, but not enough to invest in because it doesn't look at that. That doesn't grow it too much.
So 3-year growth 2%.
3.4
5-year growth
3.4 is its 5-year average. So I know some people will literally just take this divided by the 5-year average, and that's how they determine like what the growth is. So 3.4 to 3.3. So this one doesn't have a lot of room to grow allegedly. Whereas, and if you're like as preferred, basically the preferreds get paid first. So like if they ever have to cut their dividend or suspend their dividend, you'll get paid first. And I like the fact that it's not down here. Piece of shit. I can get a lot of shares compared. What am I getting? 7 shares for every one that I would get a DLR.
Oh shit! I didn't realize DLR was $147 a share,
yeah.
And the preferred is only 20. Yeah, I can kind of see that. Plus, it pays higher yield, right?
Its yield is double 6.38. And we're at a good point in this
price valuation. Yeah.
In this range. You see how it's range bound here since 24, where it goes up to here, comes down to there, goes up to here, comes down to there. So we're actually at a pretty good entry point for the next upswing.
So we could still get price appreciation, even though these don't usually price appreciate that much.
They don't. It goes up to 25, so that would be 16% increase, 17%. I like DLR, and if you we're doing the
DLR preferred
2026 podcast predictions here soon. I forget. I don't know what day we're doing it, but
4,000,
3,000. Come on, I already have $1,000. I already have $1,000 in it.
Step up your game. 145 shares. I do love the lower priced ones. Those other ones are like, we got 39 shares at this really high price. Grosker. You could have got another share of that.
Boink.
There you go. Nice rounded numbers.
Boink.
Because then you get, why does that say 49? Don't know.
Don't know.
Place order. Order state, unless that's how many shares we already have.
I don't know how many shares we have. Oh,
I'd be
Kimberly,
49.
KMB filled. Yay!
Yay!
Like I don't like. I know a lot of people like when they trade, they like to try to get a lower price. Like I basically do my valuations a few
Beforehand.
days before I buy, and then if it's in like the range of what my valuations are, I don't really care what I get it at. Especially on like ones like this where it costs like $100. Like you realize changing
Pennies.
it from changing it from 101.45 to 101.36 saves me what 6 cents, 8 cents, something like that. So it's really not worth it.
Yeah, you could stare at the screen all day. It's really hard when it's like a really volatile day too. So like in the very beginning of the market, like 9 to 11, it gets really volatile, and then like what is it right before 2 to 4 before closing, it gets pretty volatile again. So the midday is fun because it's kind of goes into a lull, slower period. And the last one, this is the last one, right? I assume you're doing the other half into 3,000 or whatever. Or did I assume poorly?
I have to look what I have left.
You don't even know.
I don't even know.
What the hell's the point of your list then?
It just gives me what we're buying.
Ugh.
So I have $3,000. I want to put $1,500 into this.
UPS?
Yeah.
Okay. Dollar cost average that thing down since we apparently got kicked in the face with it. Fell off further after it dipped.
And then I want to put. I want to do this one here. This is one here. Oh, this one. This is one that stayed
ULTI.
behind. Someone brought up ULTY. Rex shares has their own version of ULTY. It's called ULTI. I know
confusing.
It's really not that cool, but this is just an experiment. This is really just an experiment.
So you're taking $1,500 to put into this experiment of the ETF?
Yeah, I am.
Okay. Continue to explain.
I'll pull it up here in a second, and then we'll go
Seems
through.
like I just want to buy it. I know I'm buying it.
I'm going to buy it.
You didn't say anything with the reinvest, not reinvesting. You just turning all the reinvesting as the prices are down?
I'm going to go back in there.
Oh, okay. I guess it's a good thing I asked then, eh? Pacha?
Hey, Pacha. I can get a couple more shares.
Ooh.
Boink, boink. Yeah. Now we got.
And you know the band trade on that one, right? Is that why you just dropped that thing down?
No, it's like brand new.
Oh, never mind.
Let's go into it so we can look at why I'm even taking like a flyer on this one. It is
Rec share.
It's gross. Like the chart, like it started off like
It really is new.
It's pretty new when it first came out. Everyone's like, yay, and then it died right away. Like just died right away.
Were you in it in the new part?
No, it only has $7 million in it, so there's not a lot of assets under management yet. But it holds like all these like obscure little companies. Like look at the LQDA, NN,
Pony? Oh my God. Where's Tommy?
SEDG.
Pony
like,
AI Incorp?
Look at all these like this things.
Oh my God.
It pays you a weekly dividend.
What? That's cool.
Yeah, it's weekly. It's 20, 35, 20. It's already starting to do the lower dividends though, so that's never a great sign. But
it's finding its balance, maybe.
I think
it is still pretty new.
It is fairly brand new. Like.
Yeah, they do usually have higher in the very, very beginning.
So what they do,
stabilize.
They do exactly what ULTY does. They just hold these obscure companies and they write options on them.
So why is this not in our high yield portfolio?
Because I want to grow it a little bit, and then I'll probably move it over at some point.
Okay, but it is still technically one of the. What's the yield on it?
I have no clue.
You can't click on it and find out?
Where's my computer at?
Put it on the bed. Could you know? It was in my way.
It's in my spreadsheet. Give me 1 second to consult
It's
my
in
spreadsheet.
my spreadsheet. Must go spreadsheet. Can I move out of here, or do you need to be in here still?
No, you can get out of there.
I'm gonna go look at our open orders. Where the hell do I do that? Tell I'm not the one that does the trading.
Go up to trade. Order status.
Order status.
Order status.
Oh, I don't even. What?
Order status.
Where?
To the right. You're under it. Now go up.
Oh. Open?
Learn to fucking read. Yeah, open. Holy.
I didn't know it was a category. I was looking at the ones below it.
Holy shit.
Yeah, I know. Thanks. I don't do the trading. That's what you are for. You're my housekeeper. Housekept? Housewife?
I'm a housewife. That is not. Oh, Jesus Christ.
Tim can't even find his stuff. At least you can read your keyboard. I can't even read mine. So ULTI is still pending in open status, and so is DLR. What is DLR even at? 2052, and it's at 2052. Oh, so that should.
It's like 18 to 20% around there. It says currently with the 12 month trailing is 9.79, but that's because it's brand new, so it might be 15%.
Oh, the spread's
it doesn't,
wide. That's what the problem is.
It doesn't yield near as much as a ULTY.
I'm sorry, I wasn't listening. What was the yield?
Like 15 to 20%.
No, that's still pretty good, but that's not like high yield.
Whereas
crazy
whereas the ULTY from Yield Max is 140%.
Yeah. But that one.
So that's crazy. Let me go into Rex's actual page, and it'll give me what Rex thinks it is.
You mean the yield?
Mm-hmm.
Sippy.
Why is everything being fucking retarded?
'Cause it's you.
Jeez, man, it's like Oh, it says 80% on Rex's on Rex's page. So I don't know.
Does it? Doesn't that?
I don't
80%?
know I don't know exactly what the yield is.
If it is 80%.
But I was in ULTY. I actually didn't lose money in ULTY. I actually cashed out with like $100 more than I put into it. Whenever I did finally get out of it, it just it's cardiac. It's like cardiac, man. It's like, oh my god, because like there are certain days ULTY would be like $8 and it would drop down to like $6. It was just, and this one kind of does that too, but it's not like whatever. I'm just trying.
What do you mean it does, but it does whatever?
It's an experiment.
Okay, so should we be doing that in our main like?
No, I already said no. It's going to stay where it's at.
Okay. Why do you want it in here though?
Because I want it in here. I want it to grow with the drip on.
Oh. So this is stuff we're dripping. So the stuff that's more cash is in the other.
Yeah. So now we can go in here and
we
can look at everything we just bought.
I don't understand Tim's logic sometimes, but it works for him.
Kimberly, where's
What are you looking for?
Where's my page at? What the hell?
Page of what? What are you looking for?
There should be another column here. Oh, there it is.
I was gonna say there's an arrow right there.
So ES. I want the drip on in ES.
Oh, so what you're doing right now?
So I'm turning the drip onto everything we just bought.
So even if you didn't check those boxes, scroll up so they can see it because there you go. Because we're down here.
They do have a column here where you can reinvest.
Anything in your portfolio you can turn on and off at your leisure.
This is how I do it.
So if you forget to do it or you screwed up when you put the order in, you can go in here and change it. So you just turned on HTOs, ESs. I imagine you're putting Ozarks on.
I think, yeah, it's on.
Sun, Kimberly.
Skywalker.
You didn't do Kimberly yet, did you? I also probably can't follow that column across or row. Yeah, that one's still off. Okay. I did see that accurately. Wow.
Can't believe someone wants to short what we're buying. That's fucked up. That's really messed up.
He reminds me of somebody. One of our friends.
Okay. And the last 1,500 of the 30,000 is going into ups.
So you are going to buy UPS. Did you just make that decision on the fly?
No. Limit 180. We want this to be closer to that.
101.75.
And I've been gradually purchasing more shares in UPS. If you look here,
What's your status?
I really overpaid for it.
Yeah, so in the last episode that we just posted yesterday or this morning, I guess it was this morning I launched it. We went. How much did we lower our cost basis? $11 per share.
Mm-hmm.
It was something like that because we got in it after it had a massive pullback and then it had another pullback after that. So we kind of, I guess, whiffed. So we're dollar cost averaging down further to reduce our cost basis. And we can continue to accrue shares. And that's what's the nice part about Drip. Drip can literally help you dollar cost average innately. What did you just do?
I just switched that one. It's not remotely close.
Oh, do you change the buy?
Yeah.
Yeah, that spread was pretty wide when I was looking at it.
2050.
It's a big spread, 15 cents.
2052. I thought maybe we could sneak in there. Some of them you don't get until. Okay, I want to show you real quick.
I mean, if you're more patient before the end of the day, I mean, the timing of these isn't like
real quick. I'll show
detrimental.
You
can wait days.
I don't know if you know how to do this in Schwab as well, but like you can.
but getting in is definitely better than not having to come back and think about it again if it's really only a few cents, few dollars difference.
I'm going to show you why. I so overpaid for this one.
So UPS,
133. 133 around there, like 130. Yeah, like I paid my initial buy-in was 133 per share. I grossly overpaid for UPS.
Yeah.
But then
It fell.
I bought some more here at 87.52.
Did that just say 97? 87, 97, reinvest shares 97, 84.
We just bought it at 101, whatever the hell we just bought it at.
So it did come back up from that low
So
point.
I started at 133 as my cost basis in UPS. So let's go look at what it is currently. 109. So I brought it down like 24, but I still I whiffed. That's like one of the bigger whiffs I had in the last year was.
And that's nice though. That dollar cost averaging with the dividend reinvesting is very nice.
Paying that much for it, but now look at our account. Oh my God, we are cray people.
Okay, so now I want you to talk about the ones that you want to buy, but they're overvalued or they're not quite in your buy range yet. Like, what are we doing with the rest of the 90,000?
Yeah, we have 90,000 extra dollars too.
Just like go through the thought process. So
The thought process. Okay, so like just pick any stock. Like say you were interested in Pepsi.
No, what are we interested in?
Oh, well, I have to get my computer out, and then I'd be behind the computer. I don't have a list. I have a list on the computer.
We'll get it on the computer. This is the whole point. We don't want to do like arbitrary stocks. I want people to know what we're like keeping our eyes on.
Okay.
Obviously.
All right.
Reality, man. Not theory. Theory sucks.
I want to get back into PDI. That's the bond fund that we sold, but like we got into it at like $16 and it went up to like $20 and we sold out of it because it was overvalued and it's starting to come back down because I think bonds are going to do pretty well in 2026. So I want that to come. It's currently around 1850-ish around there. I want that to see if that comes down a little bit more. I'm not 100% sure like what is the price. I'll just look up PDI real quick.
I shall do that. PDI. Pity. Not to be confused with P. Diddy.
Yeah, it's like 1770. I want to see if that comes down. Like, but I'm hoping that people will be dumping things in the next week because, like, if you don't know about the tax harvesting, like they're.
Now, could you go in here and put a limit in now?
I could, but I don't have the money in there now. I have to move the money over.
Oh, okay. So we still have the money sitting in the checking account.
This is one that we're going to get into in 2020, like probably in January 2026. I'm going to get into PDI.
So tax loss harvesting, and then people like there's a massive drop that usually happens in January.
See where the price settles towards the end of the year, beginning of the next year. You'll see. Oh shit, that's.
What are you on?
So it did pull back a lot here. I think there's more pullback to come. So I'm waiting. I'm being patient, waiting to see what happens with this little thing here, because if we do 3-year, I think we might have something similar to this fallback here.
But if we do, we can get in and get a heck of a lot more shares because the yields on these things are usually really good, right? PDI?
Yeah, this one pays you every month and it pays you 22 cents a month. It yields like 14.98%. So like it's
way better
good.
than just buying
it's
the bonds
good.
individually.
So it's a little bit undervalued compared to its historic norm of 604, but I think we can actually get that a little bit cheaper. So I'm holding off on that one. I think this will come back to around the par value, like this will be 0 instead of 6, or even a little bit below it. So I'm waiting on that one. That's one.
Okay. What else?
LYB is another one that I'm probably going to get into in on the Van Life portfolio.
It's another one that we got into high.
It's in the retirement account. It is a chemical one. It's having a really, really, really bad time. I think there's
look at that chart.
I think there's more pain to come in this one. I do believe they'll be probably.
Wow.
I don't know if they'll do a dividend cut or not. If they do a dividend cut, they're going to eradicate. I don't know how many 30
roll down a hill.
30 years. I'm waiting to see what the fallout of this one's going to be.
Oh, this is the one I said I didn't have warm and fuzzies.
Do you see like how it started here in September last year and it's literally just gone
90
down?
The whole way down to like 40.
Literally gone downhill
46.
the entire year. I think there's more pain to come, but we will get into this one in 2026 at some point. A BMY is another one I'm waiting for a pullback. We touched on at the top of all this. I believe that BMY, we can probably get that closer to $48, not $55 or whatever it currently is. Target, I'll probably wait to see what happens with that one. I will get into that one though in the near future. Just a matter of like I have to see what their holiday sales like in January, and they come out and say, well, we had this much money spent over the holidays.
Target,
yeah.
let's look at that one's chart. Doesn't look as bad as YB, whatever the hell it was.
Yeah, I think that's going to go down though, because I don't think they're going to sell as much as they wanted to over Christmas.
Yeah, because everybody's still butthurt about their DEI or whatever.
That's part of it, but the other part is just
people aren't spending as much. Didn't you just read like a thing that was talking about holiday spending being down?
They're spending just as much, but they don't have as much for discretionary funds because the money's not going as far. So they're basically buying like electricity and food and shit like that. They're not spending money at Target. So like
even for Christmas?
Not really Christmas. I'm pretty now. If Amazon's any indication,
that was the article you read. It was an Amazon thing with statistics.
Yeah, was. Let me go through my list here. S-bar, I'm definitely getting into. Type in S-bar. It's basically it's
S, like Sam?
S-bar. That one's going to probably replace THTA as like where I keep my dry powder because it yields 12% and it like doesn't have a lot of crazy volatility.
Yeah, not really. It stays in a band, and it's not a very big band, like 25-20 to
and what they hold is like all they hold
40-ish.
is like treasuries and money market stuff like that. Like it's a
25 to
it's a relatively
so like a $2 band.
Low risk place to park my cash.
So that was the other question I was going to have. So we have 90,000 left to put in from the 120 for the main portfolio. What percent of that do you think is going to be actually in like dry powder? Are we moving anything into that waiting until that January, or are you kind of just letting it sit right now? I know you don't like to have cash just sitting doing nothing.
It's probably going to be whatever we don't. I'll probably put it all in, like whatever I have, I'll put it into dry powder stuff, and then
like you're going to move the 90,000 over.
I'll just sell off stuff. I have to wait to the end of the year, and then I'll make a determination.
Okay.
It's probably.
So you're giving yourself like a less than 2 week window where
it's probably going to be like half of it.
Okay. Because that was my curious. Like, what's your time frame on when you'd put it into dry powder versus when you'd actually wait for something to come into value? But because it's the end of the year, because people do that tax loss harvesting, I'm assuming this is like an extenuating circumstance.
Yeah.
Yeah. Okay. I'm trying to share the thought process.
Not tomorrow.
You're just like, I keep everything inside my brain.
When we go into stuff, I have a lot of ideas for tomorrow. So tomorrow's probably going to be pretty sick.
Yeah, tomorrow's is going to be pretty hardcore.
EPD I'd like to get into, but I don't know. Like it's energy's kind of Pfizer's another one.
Are we in EPD or is that again one of my mom's?
That's in the retirement.
Yeah, okay. EPD.
Because crude's not doing very well, but EPD's done really well for the year.
Oh yeah,
even with crude going down, but I still think it's a little. I need to wait to see like what happens with the price of that towards the end of the year.
Okay.
I'd like to get a better price.
Because if you want to get in it, yeah, you'd rather get in at a better price if people are going to tax loss harvest.
Yeah.
Makes sense.
It does. Pfizer PFE is another one that I'd like to get into, but only after
we were in that one and we got out.
Well, that's because they weren't like doing very much with the PFE. PFE.
They weren't doing much with the AI stuff, and then I guess they realized they were.
That's another one that's having some problems with their patents coming due, and where there's going to be generic stuff on the market. But I just like how that chart looks right now. It's been kind of trading sideways for like 2 years, and they have a lot of stuff in the research and development pipeline that's coming out soon. So I probably will pull the trigger on that one relatively in a short amount of time. Its yield. Scroll down to its yield. That's like 6.87%.
That's high for a freaking dividend grower.
Dividend grower. So that's
really high.
That one's going to probably get pulled in the next few days. So
you have to check the debt and all that stuff to make sure.
Now I know there's a possibility that Costco might actually do a stock split. If they do a stock split, I'm going to get into
Dump into that right away.
I'm going to get into it once the stock split occurs.
Because as we said before in the stock split episode, anything that does the actual forward stock split, they basically go back up to their original price.
Generally, it just takes. Sometimes it takes like a year.
Especially if it's one that's done it before.
And the last one that I'm looking at for getting into is going to be one that no one even thinks of. It's Nokia.
Nokia? What? Like the old brick like?
And okay.
No. Yeah. No. Why? What are they expanding out?
Okay, now we're gonna give
away.
Okay. We're gonna give. And okay, now we're gonna give away part of the 2026.
2026 predictions. Okay.
Nokia.
No.
Is heavily.
I have a little nostalgia here. For
heavily invested in the 6G.
Wow, somebody knew that. Look at that, like spiky thing.
If you're not,
What?
If you're not thinking about 6G, you're not
This thing
thinking
just doubled
you're not
its
thinking
price.
ahead because 5G is.
This thing doubled its price in
Yesterday's
the
news.
last 2 years.
It doesn't yield a lot. Does it yield anything? I don't.
Does it yield
It
anything?
doesn't. Yeah, it
2.52?
doesn't yield a lot.
Basically negligible.
But it's still a dividend stock technically. But yeah, the 6G is coming, and
But so this is a
Nokia is
growth
one of the better ones for 6G.
So this is a growth pick with some
Iron
dividend.
Mountain's the one that, like, if it keeps falling, I'll probably think about putting money into Iron Mountain, IRM.
Even though we lost so much on that
I didn't
one.
lose money.
No, we lost it 'cause we got out of
potential,
it.
But yeah.
Lost it because we got out of it. All right. Did you talk about everything you wanted to talk about?
Oh, there you go. That's how fast 30,000 lasts.
How fast 30,000 lasts. Let me
Let's
just
make
double check that we have any questions.
Let's make sure
the
these
hell do I
sold.
get out?
Now I have to put all this shit into my spreadsheet.
All this stuff in your spreadsheet.
2054, so I have to bust that out just a little bit. Then we'll bump that up to 56.
I think I know how to use this crap at this point, and I do not.
Bump that one up a little bit.
Okay, comments. Okay, so we have no extra questions, comments that have been submitted, so we can sign off now if you want. It's been over an hour. Or we can keep live streaming while you play with your spreadsheet. What do you want to do?
I'm just gonna keep monitoring this. So that'll be it for this. Then tomorrow we'll do the high yielders, which everyone loves. I bet you there'll be like so many people saying you're doing it wrong, blah
yeah.
blah 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 blah.
I'm sure Oracle will pop back on and give us shit the whole time.
Yeah, but tomorrow is going to be the fun one, I think. But for, what I've gathered from the podcast is the high yielders are like everyone's favorite.
Or controversial, yeah. Because everybody does want easier ways to make income, and you can't blame people. Like, we're in that boat, too.
So tomorrow's is going to be like a banger. We'll be back on tomorrow at 12.
Because, I mean, once we have all this stuff invested, our core portfolio is going to be worth 120 plus 80 is what?
200.
200,000, and it's going to be making like $1,800, $1,900 a month. Maybe 2,000.
What are you talking about?
That side of the portfolio.
Oh.
So that's 2,000 in almost 200,000, so it's like 10%. While our other side of the portfolio is going to have 50,000 in it.
50.
Around 50,000 in it, and it's going to be making $2,500 to $3,000 a month. So it's like you do that odds 50,000 for 3,000.
So you like that when you invest in that, you basically I am under the impression that the 50,000 is going to disappear.
Yeah,
at some
you
point.
basically look at it like you're investing in a business, like or something, and it's like the depreciation of your asset is just like part of the game. Like if you're buying a bunch of like rogue trailers. Okay, so DLR just filled. So
Everything's in.
Everything's in. And then
So
this is the core portfolio is the fallback, so that if we ever do have those go to zero, because we're gonna any month that we're sitting in the van and we're not reaching our full like our payout, or we're not reaching our full spending quota or like discretionary of that 3,000, 2,500, whatever it is, we're actually going to roll that back into the main portfolio unless we're saving it for something specific. So like at some point I'm going to be doing paragliding and crap, and that's going to be like $7,000 to $15,000. So some of that will get saved for things, but in the beginning a lot of it's going to go towards just building up the main portfolio, taking the risk off the table, because you want to lower your risk. You're willing to take risk in the earlier phases, but if you break things out well, you can kind of actually retire early and not have that frugality burnout, learn to live, but then like still hedge in the risk.
Well, but like for example, like in a week I probably spend 12 hours doing research. I bet you of the 12 hours, 8 hours to 9 hours is babysitting all the high yielders.
Oh, is it really?
I don't really put much.
You need to say that in the tomorrow stream, because that's big.
No, I don't really put much work into the main portfolio, because these should do what they're supposed to do.
The tried and true.
No, like I'll monitor earnings and stuff like that, but like I don't read all the earnings reports.
Oh, so the goal of this is to actually like decrease time so that we can go do more fun stuff.
Yeah.
Okay.
So
But we want to retire now as opposed to like scrimping and saving, because one of my biggest like desires was, if we retired this early, I don't want to have to penny pinch, because I don't want to have to say no to experiences that I really want to do.
Mm-hmm. Mm-hmm.
And that was like part of the criteria. So we were like, how do we make this happen? How can we still lower risk? And it's like finding that hybridized strategy to make it all happen. I mean, there obviously are going to be some months, but I think if I have some months where I can like indulge, and then other months where I'm like resting, relaxing, figuring out a natural rhythm, and I think I'll be content because.
But that's for tomorrow. We're
Yeah.
done. We're done.
We're done.
We're done with yous.
We're done with Utes for today.
We're done with yous. So hopefully you had fun watching us blow $30,000 like in 45 minutes.
Right. Total cash in counts 183.
Yeah, I'll probably put that somewhere else.
I know you will. Tim doesn't like anything just sitting. He'll be like, ooh, this share came down. Ooh, I'm going to load up on this.
Yeah.
So we have all those positions. That's a pretty big portfolio to manage.
Yeah.
So, we'll do the live stream tomorrow for the high yield portion. And then next podcast is going to be on
2026.
2026. Oh, but we are going to do live streams now going forward for Tim's top 10 weekly stock picks based on what's going ex-div. And that's those aren't necessarily stocks to buy, but those are stocks to get ideas. And they're really easy ways to find stocks you'd never heard of.
Yeah.
So that's why we do that.
So I'll walk you through that.
We buy a lot of the ones that we find during those top 10s each week. So we're going to start doing those lives in case people have questions. Like we can run through portfolios, whatever you want to do. So now that we have more time and space that the condo's done, that's the going forward game plan. All right. So we shall see you guys tomorrow.
See you tomorrow.
Bye-bye.
Bye.
I just hit you.
You did just hit me.